Okay, good evening, good morning, good afternoon, depending on where you're from. Welcome back to another live trading session and a Q&A session. So any questions, feel free to type it in, but we are pumped, getting ready for the minutes coming out very soon and the CPI numbers tomorrow. Okay, so audio seems to be going good on my side. We are going to start with a general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so a couple of things to look at. Obviously, pound it's going to be one, and oil, definitely going to be looking at oil. All right, let's recap the fundamentals first, just to keep you up to speed on what is going on. Hello, Narayan in Bangladesh and Nigeria. All right, gold, when will make up, sir? You mean when will gold go up? That's going to be a tough one considering what's really going on in the market. Okay, let me recap a few things. So there are several issues going on in the market, especially in regards to Bank of England. I posted something on the Telegram today. Basically, I do want to talk about Bank of England. I do want to talk about Bank of Japan and the Japanese government in terms of how they're going to intervene. Let's start with Bank of England first. Okay, we just got UK data as well, so let me just recap those UK data. It was just out. It wasn't pretty. GDP was actually down month on month. It printed out negative 0.3%. Consensus was for 0%. The quarterly GDP was down negative 0.3% as well. Industrial production was down. So a lot of this are borderlining. It's pretty much within a recession at this point in time for the UK. The issues with the UK is with the Bank of England and the date given to when they're actually going to stop bond buying, which is going to be Friday, 14th of this month, which is October. All right. So that deadline, there were some issues. There was an article by Financial Times that Bank of England has been speaking directly to banks that they could extend beyond it. So that causes a little bit of a doubt if the Bank of England is actually really going to stop bond buying program that they did to intervene and to support the bond market in the UK following that mini budget fallout. So yeah, basically there's been a statement coming out from Bank of England. Andrew Bailey basically just said everyone has 3 days to sort it out in terms of their pension funds and long dated bonds, and that's pretty much it. So whether or not they're actually going to stick to it, that's probably what's causing a little bit of a bounce on the pound, on the sterling. So let me go to the sterling. So this is on the daily. I want to show you the hourly. All right, so we do have a little bit of a bounce coming out on the sterling. That's basically off 1.0950. We saw a little bit of a bounce, but with the statement coming out from Bank of England, with Andrew Bailey saying everyone has 3 days to sort it out in terms of their liquidity, that's likely a sign that they're going to stick to it. They're not going to extend their bond buying program past the 14th of October. Okay, so see what's going on right now with the pound USD. We have been looking at potential projections lower on the sterling. That's going to hinge on the FOMC meeting minutes and the CPI numbers tomorrow. The meeting minutes, I don't think it's going to have a lot of impact, but for those that wants to watch what's going on in the market, that's going to come out in about 5 hours time. We've got PPI numbers coming out from the US in about 25 minutes time. We will update accordingly. Hello, Italy. Wow, Italy. India. Welcome. Okay, so let's talk about pound USD first. No, actually, let me talk about the next thing, which is Bank of Japan. Let's talk about Bank of Japan next. So as we can see here, there were a couple of scenarios that there could be a potential intervention at 145, 146. I think we can clear that off. We're not seeing anything coming out from the Bank of Japan. They do seem to be on standby. I think they could defend this again. They could intervene again, probably at a higher level, and that higher level is actually around 150. The only condition that's required right now to avoid intervention by Japan is basically if we don't see a very volatile movement on the yen crosses. So if we take a look at the dollar yen, this is already creeping past 146. Basically, it is going to be around 147. It could be at around 147 within the next few hours. But because of that, if we gave the whole total range, then we are going to be looking at the upper range that I mentioned in the outlook. We are going to be looking at around 148, 149, potentially even towards 150 before any potential intervention by Bank of Japan or the Japanese government. Okay, so I think traders are actually letting their guard down a little bit on the dollar Japanese yen, but we will take a look at the yen crosses later on in specifics, like some of you requested the Aussie yen. Okay, let me just go straight into the pound USD. The overall view on pound USD remains to the downside at this point in time. So we basically have the ABCD that's currently being projected in terms of where C is. We did talk about this about 2 weeks ago when we were doing the webinar on Fibonacci. We were waiting for a point C. This was updated on the outlook. There was a failure to maintain the position above 78.6%. This was something that we actually waited to see last week. Right now, the current projection remains to the downside for the GBP USD or the cable. In terms of the hourly time frame, I think that could be an opportunity to potentially resume that downtrend again. So if you guys missed out on Monday, I don't think it was a big deal, but I think some of you got in on Monday. If you guys are looking for a potential opportunity on the pound USD for today, as long as there's no hourly close above 1.110, is that 1.10? Yeah. So I'll give it a little bit of room. I'll give it to about 1.1125. If there's no hourly close above 1.1125, then we could be potentially looking for further continuation to the downside for the pound USD. Yeah, welcome. If you're new, if you have any questions, do ask. More than happy to help out. Right now we're just reviewing what's going on in the market in preparation for the CPI numbers tomorrow. Okay, overall, with the reason why I don't really want to go against the US dollar at this point in time is that there could be a possibility for the CPI to actually be a surprise to the upside. We are expecting the year-on-year CPI numbers to actually fall down a little bit. Expectation was 8.1%. Previous was at 8.3%. The core CPI is expected to bump up. The monthly CPI is expected to bump up again as well. So the headline inflation number could actually not come in at 8.1%. It could actually come in a little bit higher, maybe at 8.2, 8.3%. If it does come in higher than 8.3%, then I think the market could actually just go in one direction. Without any whipsaws or anything like that. So just be careful if that's the case. So I think what the market is pricing in right now is the potential for that higher than expected CPI to come in. I think if we take a look at the positioning in the market, I think a lot of them are actually going to be looking for further dollar strength this week following these CPI numbers. Okay, so pound USD, this one here is a little bit simple. A lot of people get confused by what's really going on in the market. So I think the whole Bank of England thing, it could be more of a noise than anything else. I don't really trust Bank of England. I think a lot of people don't trust Andrew Bailey as well. So if he says he's committed, if he says everyone got 3 days, blah blah blah, and then when the day comes, he might just say yeah, we are going to be extending it because the current situation is not great yet, blah blah blah. So that's the kind of view that I have with Bank of England. Unfortunately, I just don't have a lot of faith in terms of how they handle the whole inflation thing the past year or so. Okay. All right. So pound USD, a little bit simple here. If we go by let's keep this one. This was on Monday. This was a Monday trade. We'll keep this one. This one's still good. We are going to be using about the same stop loss on this one if you want to, but we might actually get a small stop loss. But coming back, let me just recap what's going on. If we go by the hourly cycle, then we are looking at a rejection at 61.8%, pretty much exactly at 61.8%. That's within the Ichimoku cloud, so it hasn't actually shifted to the upside. So the overall trend for the pound USD remains to the downside at this point in time. The stochastics hasn't crossed down yet, so you could wait for the stochastics to cross, or you could wait for price to move back down below the Ichimoku cloud. But at this point in time, in terms of the range, in terms of how far it might go, it could go all the way up to 78.6, which is in line with what I was expecting for resistance. That's going to be at 1.1125. Okay, so we're going to leave it there. 1.1125 is where the 78.6% is. Market could still potentially go there, but at this point in time, I think we are looking at a potential rejection at around 61.8%. So yeah, flipping it back around, we did actually have a close below that 23.6%. So for the pound USD, I already have a position on pound USD from long ago and on Monday when I scale in. So I'm not going to jump back in again. But if you guys missed out Monday's pricing, you are probably going to be looking at around the same price as on Monday. So I don't think it's a little bit too late if you want to jump in. So in terms of stop loss, I don't really want to put it at this high yet. I think the minimum in terms of stop loss, you definitely want to have it slightly above 1.1125. Ideally, have it around 1.12. That's even better. Okay, so the option is there. You can get out at 1.08, 1.09, completely up to you. In terms of the intraday projections, we will be looking at around 127.2%, which is at around 1.0875. So we are looking at a potential support coming in at around the psychological level 1.09. Okay, so pretty simple on pound USD. I much prefer to go in for a short. If you are thinking, hey, you know what, the risk is too big, I only want to have a smaller risk, that's completely fine as long as you have your stop loss above 1.1125. Again, minimum stop loss for this one, we are looking at around 75 to about 85 pips. That's kind of minimum. Ideally, you do want to have a little bit more room to go. In terms of target level, it is adjustable. Even with a risk of 160, you're still looking at a 1-to-1 risk reward ratio for the pound USD at this point in time. Again, I don't want to go long pound USD. Bank of England just doesn't give me that confidence. At this point in time, fundamentally, they're still weak, right? We got the UK numbers. Bank of England is still going to continue to hike at this point in time, but just looking at the data just now, the GDP numbers are pretty bad for the sterling, and then the overall strength on the US dollar as well. So don't really want to go against the US dollar on pretty much anything at this point in time. Okay. So yeah, in terms of target level, you can have it at 127.2, you can have it at 1.08. That's completely fine. It's completely up to you. Divergence on pound on the hourly, or is it's not applicable due to range? It's completely fine. I think divergence at this point in time, we just don't have that confirmation yet, but the fast stochastic is already higher than the previous one. So yeah, we could potentially be looking at a potential hidden bearish divergence for the pound USD. Do I think the CPI number might be bad or lower than predicted? No, I think the CPI number could actually be better than expected. But hey, I mean that's pretty much what everyone is pricing in. So if it is bad, then I actually won't do anything in terms of trading the CPI. If the number came in bad, I would actually stand on the sideline to see what's going on in the market. But if the number is good, then I will take action. But at this point in time, if the CPI number comes in bad, then there's a lot of things to kind of. That's a lot of things for us to actually go through again, rethink what's the current situation and how bad it is. If on is in an intraday trade and there is news coming out, is it okay to just leave the position open or close to avoid the news taking the market against you? I think it's okay. The way I look at trades is this. I mean, you guys trade with stop losses, right? So especially if there's news coming out on the day and you have a trade running, even though it's an intraday trade. The way I look at news is this. News just speeds up your trades. Simple, right? It either speeds up your trades towards your target or it speeds up your trade towards your stop loss. So when it comes to positioning in the market, I think the number one key that a lot of new traders obviously lack is actually figuring out the risk. So to me, I always look at the potential stop loss first before I look at the potential target. By now, for those that have attended my sessions, I always look for the stop loss first. I think there's always going to be a risk in the market. There's going to be risk in every trade. There's always going to be that probability, and you always have to assume that with every trade, there's a potential that your stop could be hit. Okay, with that in mind, I think it's okay to have an open position intraday as long as you have your stop losses, as long as you have your target set. The keyword is exits. Okay, if the market goes against you, where do you get out? If the market goes in favor of your trade, where do you want to get out? I think that's as simple as that. So you can actually stay in the trade as long as you have your stop losses and targets assigned. If you have that in mind, then yeah, I think that's what we call trading, right? If you don't have, your stop loss, if you don't have your target, you're not really trading. I really don't want to say that word, but it's a 5-letter word. All right, but yeah, I think when it comes to trading, you do need to manage your risks, and then you need to understand what's going on in the market. Even if you don't understand what it is fundamentally, I'm still going to explain it to you, what's going to happen and stuff like that. But having stop losses, having exit levels, I think that's really fundamental for every trader. So if you're new, someone here was new just now asking how I actually trade and stuff like that. If you're new here and if you really want to trade, if you really want to invest, then I think you need to understand that there's always going to be risk involved, and if you can manage your risk, then I think you're good. Yeah, a pound go for short. I'm happy for short, Ronnie. We talk about this on Monday, but yeah, I'm happy to go for a short. I already have a position from Monday, so if you guys want to scale in again, that's completely fine. If you guys jump in and want to trade for the day, you have two options. You can have your stop loss at 1.1125 or slightly higher at 1.1130. That's the minimum stop loss that you should have. The next stop loss is at 1.12. I much prefer the 1.12 in terms of stop loss. I think we need to give market a little bit of a room. It's okay to have a much bigger stop loss now. Once the market goes in your favor and you know the direction is all right, then you can actually adjust your stop losses to a smaller stop loss or potentially towards your break-even point. That way you can just let it run. Okay. All right. So that's pound USD. Pretty simple. Yeah, I don't think there's actually much. So for those that attended the Monday one, it should be easy. For those that just jump in, the outlook, I did talk about this on the outlook. There is a potential that the GBP USD it could actually be heading for that parity level. That's basically where we are anticipating the much larger long-term support, pretty much at parity for the pound USD. Even with the daily chart, we are kind of projecting towards that parity right now. Are we going to see that level happen? That really depends. It really hinges on the US CPI numbers this week. It could come in to drag the pound lower, considering what's really going on in the UK at this point in time in terms of financial stability and whatnot. Would the US dollar get stronger if the CPI comes out above 8.1? Yeah, it will. The consensus is, let me just double check it, but I'm pretty sure it's 8.1%. We did talk about this. Okay. All right, for those that are new to inflation numbers, there are a couple of things that we want to look at. There's the headline inflation numbers, which is the CPI numbers. The year-on-year, if you're using Forex Factory for your calendar news, I don't think they even list the year-on-year inflation rate. But the year-on-year inflation rate that we are expecting, it's going to be at 8.1%. The consensus range is actually 8.1% to 8.2%. So a lot of people are going to be looking at 8.1%, but it could come in at 8.2%, and that is still going to boost the US dollar up because it's going to be much better. It's actually going to be better than what the market is expecting. So that's the inflation rate. That's the headline inflation rate. If it comes in higher than 8.3%, then there's pretty much no denying that the US dollar is actually just gonna run high. So the pound USD, the euro USD, gold, pretty much everything is just gonna crash to the downside if the CPI number comes in higher than 8.3%. If the CPI number comes in at 8.1 exactly, then we will look at the core inflation numbers, which is the core CPI numbers. If you're wondering what the CPI numbers is, CPI is Consumer Price Index, right? It basically measures the inflation in the country. There's two types. One is CPI, the other one is core CPI. Pretty much every country calls it differently. Like in Australia, they call it the mean trim CPI. That's basically just core CPI. Core CPI, it's CPI X auto and gas, pretty much it, right? So if the CPI number comes in, expectation is at 8.1%. If it comes in at 8.1%, everyone's going to look at the core inflation rate. Now, with this month's number, here's the unique part. The core inflation number is expected to jump up 0.2%. So from 6.3, expectation is actually at 6.5%. Okay? So even if inflation, the headline inflation comes down, the core inflation could go up. And if the core inflation comes in higher than the previous month's number, then how do you look at this? Because there are two things to look at, right? How's the market going to react? Are they going to react to the CPI number, or are they going to react to the core CPI number? I think the market this month, they're actually going to react to three numbers. Okay. Number one is the year-on-year CPI. That's the headline CPI numbers, right? Number two, we've got the year-on-year core CPI numbers. And then the third one that people are actually going to look at is the month-on-month CPI number. Now, with the year-on-year CPI expected to come in lower, the core CPI and the month-on-month CPI is expected to come in higher than the previous month. So, because out of that three data, two is expected to come in stronger than the previous month, that could be a high possibility the headline inflation number might actually come in higher than what the market is expected. Okay, so that's the concern in the market at this point in time. Pretty much that's just a crash course or on CPI, but we will have a webinar talking about the fundamental data on what is really CPI and stuff like that. But just for the sake of simplicity, for those that are new and not really interested in fundamentals, we are looking at three things tomorrow. Headline CPI numbers, right, which is the year-on-year CPI, YOY. Core CPI year-on-year, and then CPI month-on-month, okay? That's what we're going to be looking at. Okay, so quickly on that CPI, everything is good. All right, next up, it's a Euro USD. So for the Euro USD, we are currently within this cycle at this point in time. This was okay, everything is good. In terms of daily, we have surpassed 61.8%. For the third day, we actually break below that 61.8% pretty much on Monday. So this is already on the third day. As you can see, market is actually unable to go back up above that 97 cents for the daily 61.8%, which equates to a downfall in terms of the hourly time frame. In terms of situation, do we have that stronger pullback and whatever? I think there were a few of you that were asking last week in terms of, you know, position adjustment. This was actually asked on Friday. Yeah, you know, it's the trade is pretty much done. If you want to get out, feel free to get out. If you want to jump back in on this one, for the Euro USD, we're still expecting further progress to the downside. You know, we're still looking at 96, 95, 94. The limit that I have, the floor that I have right now is pretty much at 94 max. So yeah, if you're looking at jumping back in, you might want to go short. If you want to, you can go short if price breaks below that Ichimoku cloud. The minimum stop loss that you should have is going to be at this high here, which is around 97.75. That's kind of where the stop loss you want it to be. In terms of target level, you know, do you really want to go for that 96? It's completely up to you. It depends on your trading style. If you are just going to be trading intraday, then I would probably just be looking at around 127.2%. But you know, if you want to go by the daily target, then we are going to be looking at around 96, which is going to be the hourly 161.8%. Okay, so I'll lift this one here. That's the minimum risk. You are going to be looking at around 75 pips of risk. In terms of target, you could potentially be looking at around 96 to 100 for the Euro USD. But yeah, nothing much has changed. I don't think there's a lot of panic. I think it is quite okay pre-CPI that we see markets like this. Pretty stable. That way we can actually kind of figure out where our potential risks are in the market. Okay, so Euro USD, nothing new. In terms of how far, you know, the projection could go for the daily, we are still looking at a potential for this one to go all the way down to about 94 on the daily for the Euro USD. Not going to be looking for Euro USD long. I just don't see that happening right now. We will talk about Ichimoku Kinko Hill on Friday, so you will understand this on Friday. But overall, we are really within a very strong downtrend. We have been below the Ichimoku cloud since forever. Since 18th of June 2021. Wow. That's about close to about 1.5 years, yeah. Okay. So yeah, nothing much on Euro USD. Overall trend remains to the downside. So yeah, I'm not really looking to go long on anything. Okay, so we got a request on Nasdaq. Okay, sure thing. Let me get my Nasdaq. PPI 0.4, higher than expected from 0.2%. So the number's good for US. Sorry, I'm just trying to pull my which Nasdaq. Okay, let's start with this one. Key support levels taken out, no big issues. I think there are a couple of levels that we can actually raise. I will keep 12,000 just for reference sake. I will leave 1.1150. Okay, Nasdaq on daily. Let's take a look at the weekly pivots. We are trading below pivot. We have that pivot pretty much at 11200, so 11,200. Sorry. Okay, so we got support pretty much coming in at 10,691 this week. That could be our reference point, but let's go into the hourly time frame. I think we are still going to be looking at overall weakness on the stock market. I think there was actually talk about the bond market and the stock market to actually be more volatile than the crypto market this year. Anyways, Nasdaq 100, I'm still going to be looking at further continuation to the downside for today, especially with how the stochastic is forming out to be. But let's count it just in case. We basically have rejection at 78.6%, so we are pretty much in line with the current move. I much prefer to go for a short in terms of Nasdaq. But be careful, equity is going to get really volatile. You know, if I were to give, if you ask me, if I were going to trade currencies or the futures market, the equity futures market, I would actually leave equity futures market behind at this point in time. I think there's a lot more risk involved. Okay, but if you guys are asking for my opinion on Nasdaq 100, I'll much prefer to go for a short. Just as long as you have your stop loss pretty much at around 10,150 to 11,000, as long as you have that range as your stop loss, that's completely fine. In terms of target level, take a look at this one here. 150 points to the downside is not a big deal, but I don't think we are going to be looking at a huge movement until that CPI number comes out. Right? We might see a little bit of a movement on the FOMC meeting minutes. Current fluctuation is basically just on the PPI numbers. But this is pretty much pre-market open anyway. Okay, so Nasdaq, I don't have a lot of faith, unfortunately, pretty much on anything except, the dollar's going to be strong. The risk sentiment is going to be off in the market. So we are still going to be looking for that risk aversion in the market. A lot of people are actually sidelined from the equity market. I'm one of them. I'm actually sidelined on the equity market. Just waiting for the moment to buy back in, but I don't think it's the moment yet. A lot of people are thinking, you know what, that moment could come in anytime soon, so they rush to buy stocks and stuff like that. I think it is a little bit too early to decide that this could be a bottom for the stock market at this point in time. I don't think we are looking at the bottom yet. I think we could be looking at further progress, further downside pressure on the stock market. Okay, so but going by that, we technically have this fib to go by. So market could even go to 10,600, potentially even 10,300. We're still within that cycle, so nothing much has changed. So what we just draw on the hourly time frame really means nothing. So if you want to trade it based on the daily, I think that would give you a lot more clarity rather than trading it on the hourly time frame. Can I take a look at Brent? Yeah, sure. We are going to be taking a look at the XCI anyway, but we'll take a look at Brent. I haven't taken a look at Brent for a long time. Okay, you guys have, oil traders probably have been hearing what's going on with Saudi Arabia and stuff like that. To me, it's all still a lot of noise in the energy market at this point in time. If you're looking for, in terms of direction, in terms of where to go for this one, just be mindful, because I will show you. This is the cycle that we have here. Price is actually really approaching 127.2%. So it actually created a new extension. So for now, even if you go short oil, you are kind of limited to about 90.89. I would place it around 90. Actually, I'll just place it at 89. So we have a little bit of support coming in later at around 89.90. So if you do plan to go short on oil, just think about it. You could actually stumble across that support later on. Okay, in terms of risk reward ratio, if you are planning to go short on oil, look, there is a lot of risk involved. I don't think it's quite time to go for a major short yet, or long-term long on oil. But this is the current daily view on UK oil. Let's take a look at it on the early time frame. I think yes, we could be looking at the potential short. If you are planning to go short UK oil, that's okay, but you need to treat it as more of an intraday trade. And in terms of having your stop losses, make sure you have it at pretty much 95.50. Okay, so in terms of target level, we could go by the extension, but we could really be looking at around 92. That's going to give you about risk 1-to-1 risk reward ratio. Is it worth it? It's okay. It's not really that great, but I mean, if you're going to be looking for an intraday trade, I think yeah, we could see more pressure towards 90 level on the XBR. So you could be targeting 92, 91. 90. It's depending on what you target, that's going to change the ratio, but just to be fair, you should be looking at around 92 as a potential support for UK oil. So that's going to give you about 1-to-1 risk reward ratio. Can I take a look at silver? Yeah, I can, but can you be more specific in what time frame you want me to take a look at? Because I could take a look at it from daily. If you trade under 5 minutes, it's going to be meaningless. Do you want it as an intraday view, or do you want it for like a weekly guidance view? Just let me know there. Okay, in the meantime, I'll go to gold. So yeah, I'm just waiting for that Arinze to give me an answer on that. But here's gold, and I don't have anything fancy to say for gold. Look, the US number just keeps getting better. If the CPI number keeps getting better, then yeah, FOMC is just gonna hike. The thing with the FOMC is, are they gonna continue hiking by 75, or are they gonna drop it down to 50? That's basically what the CPI numbers this week kind of hinges on, right? If the CPI numbers comes in still higher or still hot, and that's what they call it, then yeah, then we expect the FOMC to be hiking even more rates, even more basis points every time they hike rates. Then that's likely going to drive gold to the downside. I don't expect any buying on golds, and I wouldn't say I cannot say this is the time to buy anything gold. You might get people saying, yeah, you know what, gold it bottoms out and stuff like that. If we take a look at the 5 minutes, we can go long and stuff like that. Sure, but I'm not here to tell you what to do in the next 5 minutes or so, but I'm gonna give you the perspective that the overall tone on gold remains to the downside. I just cannot look at a possibility of a bullish gold market if the FOMC continues to hike rate. If you guys want to know what's going on between that, if interest rate goes up, the cost of holding physical gold goes up as well, and that's going to push gold prices down. Okay, people are going to dump gold, and that's basically just the logic behind it, and that's going to affect the futures contract, which is what you guys are trading on. Okay, safe haven doesn't apply anymore for gold, because people will actually avoid gold, and they will actually place dollar as a safe haven and the Japanese yen as a safe haven. So yeah, have that perspective in mind. So every time you go in long for gold, be prepared to be disappointed, be prepared to be smacked around by gold. I just will not ever go long gold. So you might call me biased. Yeah, sure, I might be biased, but that's my view on gold. In terms of how far of a support for gold, then we're still looking at 1650, 1640. We're still looking at that limit for gold as a potential support. So we're not really looking for, yeah, you know what, CPI number is going to come in crazy, gold's going to push below 1600. No, we still have a lot of support. We got support at 1625, 1640, 1650. So it's not going to be like, a bullet through paper kind of scenario with gold at this point in time. So my view on the daily is that, yeah, I would look for any potential pullbacks in the market. Then I would look for opportunity to go short if that opportunity shows up. So if you are trading gold intraday, right, what are you going to do with this? I think it's quite clear in terms of support level. We've got around 1660. If price breaks below 1660, then yeah, I much prefer to go for that short on the breakout. I'm not looking for any long opportunities. I just cannot say this is there's anything long for this one. It is below the Ichimoku cloud, which is something that you guys are going to pick up on Friday. If it's below the Ichimoku cloud, then we're looking at this as potential downtrend continuation. So I much prefer to wait for a potential break, ideally below 1660. In terms of stop losses, you might have it here, you might have it there, but that's a lot of risk involved in there. In terms of target level, I wouldn't really go anything more than 1625 at this point in time. Okay, so even if I go by an intraday scale, you're still looking at a potential $24 of risk for a potential 30 to 33 gain if gold does really badly against that CPI numbers. So does it make gold attractive? To some people, yeah. I just never find gold attractive because I think there's too much risk involved in gold. Even though it's, if you hold short for a long period of time, it might sound beneficial to you, but the real case scenario with gold is it just doesn't work that way. It is super choppy. Okay, so if you're asking for my opinion, I would say, yeah, you know what, if there's a break to the downside below 1660, by all means I much prefer to go for a short. I'm not going to be looking for a long, especially not before these CPI numbers. I just talk about gold, man. Okay. All right, let's take a look at dollar CAD on the weekly. Okay. Dollar CAD weekly at wave 3. I don't think we even have a wave 1. We can't say this is wave 1 because that's pretty much neutralized by wave 2. I don't think there's a proper wave cycle on this one. It might show up on the monthly. It still looks pretty choppy. Unless you say this is a wave 1, but this can be a wave 2, this can be a wave 3, so yeah. Anyway, this could be a wave 1. We already passed that. Or this could be a wave 1. We already passed that level as well. I'm not seeing a wave 3. I'm just not seeing one wave at this point in time because we're still pretty much in ending diagonal. So I think we just started a new wave cycle potentially, but definitely not in wave 3 count yet at this point in time. And definitely not visible on the daily time frame as well. Okay. If inflation is slowing down, FOMC is still going to raise interest rate, yeah? Okay, so basically there's still possibilities for stronger US dollar. Exactly. So, all the fuss with the CPI tomorrow, it's, as I said, it's going to split things up, alright? Whether it's going to prove you right or it's going to prove you wrong. Whether we're going to be looking at a potentially one-way ticket for a strong US dollar or not. I think the way I look at the CPI numbers and the FOMC is that there's actually two separate things, right? The FOMC is going to continue to hike rates to bring inflation down. If that inflation number does go down, the FOMC is still going to hike rates because they still need to bring it down from 8% to 2%. That's a lot, right? So here's the thing. The question is not whether the FOMC is going to stop hiking interest rates or not, but what is the size of that interest rates hike? Is it going to be 75 basis points again? Could it be 100? Could it be 50? Right? So here's how the CPI plays out tomorrow. If the CPI comes in higher than 8.3%, then the market is actually going to price in for a 100 basis points hike by the FOMC. If the number comes in below 8%, that way we know the CPI number is actually really slowing down. It came down below 8%. Then market will think that the FOMC will only hike by 50 basis points. So these are the only two outcomes. So there's three outcomes. These are the two opposite extreme of the outcomes. And then there's the middle outcome that, yeah, FOMC is still just going to maintain 75 basis points. The CPI number is not really going anywhere. It's not really slowing down. It's stagnant. That's scenario 3. Okay? So it's not CPI and FOMC as being one and the same. They're completely different things. The CPI number is actually what the FOMC is going to be watching for. If the CPI number doesn't come down, then the FOMC will continue to hike rate to bring that CPI numbers down. Okay? Does that make sense? Let's take a look at dollar CAD. I'm curious too. I mean, what's the point on this one? Wave 1 is 1.20109. 1.20109. Okay, so you're starting your wave count from there. Wave 1 is this. Wave 2 is 1.22829, yeah? 1.2282. Right. Wave 3 is, sorry, I'm just gonna highlight this. 3826. So you're saying this is wave 1, that's wave 2, and this is currently wave 3. That would be okay, except that we actually have this stuff here in the middle, which makes it a double zigzag. So yeah, it's not a simple wave count. So that part there in the middle, it's actually a flat double zigzag. It kind of neutralizes a lot of stuff, but if you're measuring your wave 1 as that, then you know you could look at that potential and pretty much at 1.35275. Not really an accurate wave count that way, but hey, you could still project that, and we are beyond that projection anyway. Does that make sense? So with the dollar CAD at this point in time, it's not really a simple 1, 2, 3, 4, 5 classic wave that we talk about. There's something in between that 2 and 3 that you just told me. I don't really count this as a classic wave that we can actually just base it. Oh yeah, it's a simple 1, 2, 3. It's not like that at this point in time. Okay, but yeah, I mean, if that's a wave 3, then in terms of all criteria and whatever, as long as price never go down to 1.2950, then it's going to be a valid wave 4. You can still measure a correction. It's just that we can't take this and measure a correction. Okay, because if you go by the fib cycles, you actually need to take it from there. And that's pretty much the last wave on this one. Okay. All right, we good? No worries, man. But yes, that's a very good observation. It's just that there's something in between that 2 and 3 that kind of cancels out a normal classic wave cycle. If you don't have that middle part, like this one here, then yes, your count is good. I'm okay with that count because I actually see that 1, 2, and that's completely fine. In terms of how far the 2 corrected, that's still within projection, which is pretty much 61.8%. No worries. Okay, let me go through quickly several Japanese yen crosses. Number one, I actually want to talk about the Aussie USD. So, does anyone have a short Aussie USD? If you do have a short Aussie USD, this one's a little bit overextended right now. Okay, this is quickly approaching 200%, which is pretty much at around 62. Can it break lower? Can it go to 60 cents? It could go to 60 cents considering how weak it is right now, because in terms of risk sentiment, Aussie, it's really risk sensitive. So yeah, but a lot of you guys should have a good run with the Aussie USD from, I don't know, like 2-3 weeks ago. If you did have that good run with the Aussie USD, you might want to scale out a little bit because this is right now close to the projected support, which is at around 62 cents for the Aussie USD. Okay. Next up, Aussie Yen. So we still don't have that scenario yet. For the Aussie Yen, we're still bouncing between 91.92. I definitely want to see a move higher than 95 actually to actually start positioning myself. But at this point in time for the Aussie Japanese Yen, I really want to stay away from the Aussie Japanese Yen. With the hourly time frame for the Aussie Japanese Yen, it is starting to come inside the Ichimoku cloud. We might see this transition, so if it does break above 92, 92.50, so keep that range in mind. If it does come above 92 towards 92.50, we break this range, then we are likely going to transition over to the upside. But I will only go long short-term intraday or short-term swing if it does break above 92.50, and you need to have your stop loss at below 91, at 91 or below 91. In terms of target level, we could potentially be looking at around 95. Okay, that's a lot for the Aussie Japanese Yen, and I like that scenario, but you need to wait it out. Don't rush into this. Okay, for Euro Yen, I think we just transition over. Right now, we do see a potential for a little bit of a pullback to the downside. I think we are over exhausting the current extension for the early time frame. We are really coming in close towards 127.2 and 161.8%. That's going to come in around 142.50. So expect a little bit of a resistance to bump in at around 142.50 to 143. For the Euro Yen. So if you have any short position, long position on the Euro Yen, just be mindful that you need to scale out between 142.50 to 143. Pretty much all the way there. Okay, so really approaching that resistance there. Do keep in mind the current level around 142.50, 143 was the previous support. Right now we are testing that as potential resistance. If we do get a rejection, then we're actually going to be looking at market correcting a little bit towards maybe 141.50 to 142. So I will actually get rid of 141.50. So 142 to 141.50. About there. I'll get rid of this fib. I'll actually be more precise on this one. I'm actually going to be looking at 141.75 actually. There we go. Right, so if we have a little bit of rejection, if price is unable to break past the box range, which is pretty much capped at 143, then I expect this before we actually potentially break even higher on the Euro Yen. Okay, so I do expect a little bit of a pullback first. I'm not in any rush to jump in for a Euro Yen long. Look, think about it. not really keen on going long selling yen or euro yen at this point in time until CPI pass, because whatever happens with the CPI, if the US numbers are really good, if the CPI numbers comes in hotter than what the market is expected, it's going to drag the euro USD and the pound USD to I don't know where. Okay, so be mindful on this one here. Euro pound. Okay, let's quickly jump on the dollar yen first. Let me just wrap up the yen crosses first. Okay, dollar yen is also a unique one. I don't think this is actually tradable in terms of an intraday scale, because in terms of risk and where you position yourself, this one has been creeping up above 145, no intervention, creeping up above 146, no intervention. So it's likely going to creep up slowly. It's just that it doesn't bode well if you're planning to jump in for a long at this point in time. If you were patient enough and you get in every time it crept up, then you probably have gotten a few entries on this one here. But at this point in time, if you do want to go in on the dollar yen, if you jump in right now, your stop loss is actually going to be around 145.40. It's not really that great, even if you go for that 149 upper range, which is really pushing it. But that's pretty much it. So you're not going to be looking at anything fancy on the dollar yen. So I would say stay away from the yen crosses if you don't want to have any extra added risks involved. Unless you already have a position from, I don't know, since forever on the dollar yen. But if you're looking at jumping in on the trend, this is a little bit too late for that. And even for an intraday trade, for any yen crosses, you're better off with trading the euro yen or sterling yen despite the risk there. But anyway, the situation with the yen here is this. If this is not something you're familiar with, don't trade the yen crosses. This is not the right time to be trading the yen crosses. It's a right time to be trading anything dollar related. Yeah, that's completely fine. With the yen crosses, if you trade the yen crosses, you're opening up to a risk of a potential intervention by the Japanese government and Bank of Japan, which is pretty much what's stopping the yen from falling really quickly at this point in time. That's pretty much it. But yeah, if you don't want that added headaches, I think stay away from it. Okay, let's take a look at euro pound. We did talk about gold already, so I'll recap briefly before we finish up. But we already did talk about gold, and my view on gold remains the same. I'm never bullish on gold. Okay, euro pound. I think we could potentially be looking for continued long, on euro pound. Previously, we got 87, 87.25, 87.50 as potential support. We bounced off 87.25. 87 still good. So if you're thinking of going long on euro pound, I think that would be okay. In terms of euro USD or the pound USD, I'm more negative on pound, right? So in terms of the euro pound, I think I much prefer to have a long euro pound than a short euro pound. But if we take a look at the whole daily picture here, it is still quite choppy as it is. But yeah, the daily transition, we have that bounce off 20 at this point in time. We have that bounce off 87. I much prefer to go long euro pound. And you can actually pick that up from the hourly time frame as well. Let me just measure how far this is. About 78.6. Yeah, exactly 78.6. So yeah, if you do plan to go long on euro pound, I'm all in on this one. Just make sure your stop losses are below 87.50. In terms of target level, you do target 61.8. No, actually around 78.6 if you want to, before adjusting it to 89. Okay, but ultimately this is going to be a target level for euro pound. For euro pound, this is a reasonable range. It's not really that volatile because you're still looking at around 30 pips. But do keep in mind, euro pound does double the position size. So just keep that in mind. Aussie New Zealand. Alright, let me take a look at Aussie New Zealand on the daily first, and then we'll take a look at it. Aussie New Zealand on the daily looks really choppy. We broke support. We might still have pretty much a lot of support is around here, which is 1.1175. Okay, that's pretty much your last support. 1.1175 to 1.1150. That's pretty much the last support range for Aussie New Zealand. If we have that daily break below that level, it will likely transition below the Ishimoku cloud. If given time, today's Wednesday, you're probably looking at that transition towards the end of the month. Hopefully we don't see that transition, but is it time to go in on long on the Aussie New Zealand? At this point in time, it's a little bit too early. I think we're still positioned for a short on the Aussie New Zealand, and that seems to be the case on the early time frame. Do expect a potential support to come in at around 1.1175, 1.1150s. If you have a short position that you want to think of, your stop loss is going to be there. In terms of target level, it's not really worth it, is it? You're risking about 50 for a potential 35. Definitely not worth it. Aussie yen, we already took a look at Aussie yen. This is the scenario for Aussie yen. Oh, where is it? There we go. Okay. We did take a look at Aussie yen. Let me zoom out a little bit. This is on the daily for the Aussie yen. Am I using this chart just now? Okay. Where's my Aussie yen? Yeah, here we go. Right, so this is with the Aussie yen. So we basically have support pretty much at around 91.92. So as long as price is actually within 91.92, there's nothing much to do. In terms of progression, I would prefer to go long on Aussie yen if it does cross above 92, which is pretty much this. Okay. So it will actually need to progress above 92.50. If it does break above 92.50, then you could go long with a stop loss pretty much minimum at 91. Potential target level towards 94, 94.50, 95. That's pretty much it for Aussie yen. Okay, but as long as it's actually between 91 and 92, not liking it, so I need this to transition away from that range, 91, 92 range, just because 91, 92 range has been an established range for the Aussie yen market pretty much the whole year. Okay, so prices bounces off this level once, twice, 3 times, 4 times. This is the 5th time, so I will need this transition above 92 before going for any longs on the Aussie yen. Going short on the Aussie yen will need a break below 91.90, so it will need to take time on the Aussie yen. Okay, so I think we can wrap it up for tonight. Don't forget the CPI numbers. Don't forget the FOMC meeting minutes numbers. FOMC meeting minutes details. That's going to come out in 4 hours time. I don't think it's going to be key, as we pretty much have that CPI event tomorrow. Tomorrow's CPI event is going to be big. So any surprises to the upside, that's going to be strong for the US dollar. No questions asked at this point in time. So in terms of probability, if the headline CPI number year on year comes in at 8.1% as expected, watch out for the core CPI number. If it comes in at 6.5%, then that's going to be beneficial for the US dollar. If the if the headline CPI numbers or the year-on-year CPI number comes in at around 8.2, 8.3, then that's going to be considered good for the US dollar. If it comes in higher than 8.3%, then the market's pretty much going to crash tomorrow. So that's the whole situation there. Anything below 8%, everyone's going to look at the core inflation numbers, and everyone's going to look at the monthly inflation numbers, and pretty much everyone's just going to find an excuse to say that, yeah, the FOMC is still going to hike interest rate. Okay? So anyway, we don't know what's going to happen tomorrow. Just make sure you have your stop losses before you let your trade runs. Do not leave your trade open without a stop loss or without a target level before CPI numbers. Make sure you do that adjustments maybe an hour or two before the CPI number hits. Okay. Other than that, good luck with the trades, and I'll see you Friday for the Ichimoku Kinko Hill session. Okay. Good luck. Stay safe.